Finally, I'd like to talk about the advantages of the Canadian mortgage system. The first advantage is that they use a 5-year rollover mortgage. So instead of fixing the interest rate for 30 years, you could have a 30-year amortization schedule so that it pays off slowly, but the interest rate changes every 5 years. So you have your mortgage, you have your 30-year amortization schedule, so you pay off some of it, but after 5 years, the interest rate gets reset to whatever the market rate is at that time. Now, in the U.S., we're used to thinking of adjustable rate mortgages that adjust to a preset index. So we would look at some index of 5-year interest rates, like the 5-year Treasury, and go 1 percentage point above that or something like that. But I think the way the Canadian system works is you actually can renegotiate. Whatever the lender is currently charging, or you could even conceivably go to a different lender. So you have the same mortgage and you just shop to whoever is willing to give you the best rate at that point in time. The advantage of this is that a 5-year loan probably could be held safely by depository institutions. You see, a 30-year loan backed by deposits or certificates of deposit, savings accounts, checking accounts, that really doesn't work. We saw that with the savings and loans, where they were holding 30-year loans at 6% and their cost of funds went up to 10% and they were losing money, they were bankrupt, and so on. But it's over a 5-year period, it's very much less likely that your cost of funds will go up that high. Moreover, if they as they start to accumulate a lot of 5-year mortgage products, they can start to extend their deposit lengths. They can issue 5-year CDs, 3-year CDs, and so on. They could also employ hedges of various sorts. So a 5-year interest rate is just much easier to manage than a 30-year interest rate, and so depository institutions can do it. And that would have the advantage that you might not have to rely so much on securitization. Securitization, with all its costs of principal agent problems, of making sure that the people who are making the loans have interests that are aligned with people who are investing the loans, all those problems go away if they're kept in depository institutions. Of course, this is a major political disadvantage with the 5-year rollover, which is that it might take Wall Street out of the mortgage business, and they wouldn't be happy about that. But I believe a 5-year rollover mortgage would be a lot safer, and having it in the sort of originate and hold model of the depository institution rather than the originate to distribute model of securities, I think might actually squeeze some costs out of the system and just make it run more smoothly. So that's the first thing to consider borrowing from the Canadian system, is the 5-year rollover. The second thing is that they have recourse to the borrower. That is, in the U.S., no matter how wealthy you are, if you have a mortgage of $200,000 and the property is worth $150,000, you can default on the mortgage, and you take a hit on your credit rating, but that's it. Your obligation is over with. That's at least true in most states. That's called having a non-recourse loan. I think we've talked about this before. In Canada, the loans are recourse loans. So if you have a $200,000 loan and a $150,000 property, and you hand the keys to the lender, you still owe $50,000. That's what recourse means. They have recourse to you as the borrower. So you either have to declare total bankruptcy, or if you're not bankrupt, if you're wealthy, if you're a speculator, you've got to come up with that money. So what recourse does is, first of all, it reduces lender losses, so it lowers the risk premium. But most importantly, it really gives speculators second thoughts. Because now, so with no recourse, speculating in housing becomes a heads I win, tails you lose proposition, and I want to get the maximum loan possible. So with no recourse, you want the maximum loan, and you bet all you can if you're as a speculator. And if the house price goes up, you win, and if the price goes down, you give it to the lender, and the lender takes the loss. Recourse changes that equation. You have to think, wow, my income and my assets could be tapped by the lender. And so now you're not thinking in terms of how can I take the biggest leveraged bet possible. I'm thinking, I have to ask, is this a good bet? Is this a bet that I will take knowing that I'm on the hook if it loses? That is, if the price goes down, the buyer loses, not the lender. And so now there's a much more incentive to be very careful about speculating, and you get a much less speculative market. And guess what? Canada has had less of a housing bubble than the United States. So so I really think that we should consider going to their 5-year rollover and to recourse loans. And the way to get to recourse loans would be to sort of have set some kind of national standard for mortgages that qualify for the various subsidies, including securitization, including safe harbor for we won't go back and punish originators if something goes wrong. People are talking about things like that. So to have recourse be the standard. As to the 5-year rollover, I think as long as you do not subsidize 30-year loans, so if you don't subsidize 30 years, and of course a lot of the way we do that is by in effect have the government take the residual risk in 30-year loans, which we really did when we had Freddie and Fannie. When you have Freddie and Fannie offering 30-year loans, the taxpayers are taking the residual risk, and there's a subsidy there. So, but if you get rid of that subsidy and borrowers are faced with the price differential between 5-year and 30-year, I think a lot more borrowers will choose 5-year loans, and we would get to that Canadian mortgage system if we had a level playing field. Okay, so that's it.